Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your metals market update, and this is late in the day. This is now 4:50 p.m. Central Daylight Time on Wednesday, the 14th of June, 2017, FOMC day. So let me give you what the FOMC did. The FOMC raised its interest rate by a quarter point. It said that it's going to start trimming its balance sheet. It didn't tell us when, but it's got a $4.5 trillion balance sheet, and they're tossing around something in the area of 30 to 60 billion a month when they do it. Now understand that when they start trimming their balance sheet, it means that as notes and bonds roll in and mature, instead of going back into the market and buying more, they stop that. It comes right off the balance sheet. They don't invest that money. That's what it means. So everything's going to shrink. Do they give the money back to the Treasury? What do they do? I don't care. They're just not going to be in the market buying. If they're not in the market buying, one of the things that happen is when you have buyers chasing a market, do prices go up or down? That is the problem. If you get less buyers, and that's what this is saying, where do you replace them and how do you drive interest rates up on that scenario? It's an interesting thought. You got to think it through to understand which way is it going to go for interest rates. I am not as convinced as the Fed that that is going to drive rates up. In fact, there's starting to be a lot of dissension on it, but we're in the metal markets, and let's talk about that because one of the key elements for metals is inflation. Now, I am writing my gold report right now. I'm probably 90% through with it. I've decided to focus on this gold report, and I haven't written one in this year. This report's going to be on the longer-term aspect of gold, looking at the monthly charts for the bigger player that wants to say, hey, I like gold. I'm not interested in day-to-day gyration. What's the picture going to look, Ira? And where are the breakout points to the upside and downside given the current situation? I cover all that. I cover it with MACD line. Yeah, an MACD for a change, not the slow stochastic, because I like that for the longer term charts. And you'll see the swing lines, key moving averages in my analysis of the fundamentals. We'll talk about how to get that right at the end of this. So here you are on your weekly chart. You still have the pattern of higher lows, higher highs. You can't get away from the fact you hit last week the the upper Bollinger Band. You're pulling back, and you might be going back to the 1252 level. Now you'll say, why? Look at the market's 1272. 1272. The problem is that's not really the settlement price. 1230 today is when settlement prices come in, almost every day in that central time. The Fed announcement came out at 1, and Ms. Yellen spoke at 1:30. Prices broke as she spoke. They didn't go up. While the market is looking today at 1275.90 is the settlement, no, the market was trading around 1260.62 right at 4 o'clock when the trading finished, but it does settle at a different time. So the market still would be up here. This is still valid. You've got a down thrust in the market, but watch out below because while you've got a 1275.90 today, and that is going to be higher than this number, the market's going to open tonight lower than that, and does that break the pattern and make it lower and low? That would be very much in keeping with the current down thrust that we're seeing. When you look at this chart, you see a big swing to the upside. Admittedly, on a chart, that's all I care about. If today's low is taken out, that would, in my words, be a bull trap. People that bought today get caught. Everybody above that's caught, and I'd be looking for prices to break further on the market. When you put on the swing line, you can see that you've had a pattern now of a lower low and a higher high. That is not bullish. The moment you took out 1261.30, I was disappointed in the market. And that didn't happen today. That happened yesterday when you hit 1260.50. Today you made a lower low, you came up, but as I said, when we reopen, if the markets open anywhere near where they were trading at the end of 4 o'clock, they're going to be about $13 lower. That would put the market back underneath the 18-day average, and the key is going to be this 59. Now, if you take out the 59 level, I look to see what's the next big number under it. It would either be 50.10 or it would be the lower Bollinger Band. Well, by Jove, they're both together. They're 1250.10 and 1249.60. So if the market succeeds in taking out today's low, that's the next support zone. It won't change the trend in terms of the swing line because you still have the lower low and the higher high. It will change only where the market's at as it reopens in relation to the 18-day average of closes. And momentum is still going to be pointing sideways to lower. So this market is neutral and might be ready to test lower support areas. That's the best I can say. If there's a surprise, and I would be surprised, you take out today's highs, then I think you're on your way to challenging the upper Bollinger Band. But that would be a big surprise to me. A market that did not and does close what I think is the right way is you close when the market's finished trading. None of this nonsense of these 12:30 settlements and then you trade the 4 o'clock. The ETF in gold. Now you got lower highs, lower lows. Now this is what we had coming in. When I redo the chart, and I wanted you to see this, it's going to change because of the outside day down. We took out that low, momentum pointing down. If the market wants to continue to the downside, 118.5 to 118.40, the support zone. So they're together just like we saw in the other market. GDX, lower highs, lower lows. So the true markets, as I'm going to call them, because they had a chance to see the Fed announcement, they had a chance to see Miss Yellen, and they kept trading, and then they settle after all that, are these markets. Now, you went to 2209 in the GDX, the lower Bollinger Band's 2216. It has hit its downside target. Resistance on the way back up, I would estimate between the 18 and the 100-day average of closes. And should this market take out today's highs tomorrow or the day after, very bullish scenario. Should this market ETF of GLD take out today's highs tomorrow or the day after, again a very bullish scenario. I don't expect either to do that, but it's worth pointing out. Then we get to the gold-silver ratio that is still in a bearish or bullish formation. What do you see here? I still see it as bullish. The market has still got this pattern. You came down, you got to bounce. You have to take out this low in order for me to say it's beginning to reverse now in favor of silver. In other words, gold got too expensive to it. When we look at the silver market, we see that the market just came in, and if that is correct, the markets are just, they're just open. This is Thursday's trade. So you're down 25 cents already in there. Let's go to the gold market, because gold will give us a current quote now too. There you are. What did I tell you as I was recording this? It opened to the last prices. So here you are down. You haven't broken through this 59 level yet, but if you do, that could be problematic. It's nice when these things happen, and I can do them like a magician before they happen. So as we look at the silver, as I was saying, you might be going back to this number right through here. It's not an outside day. It's a market that's oversold, coming into a big support area of 1677. In the copper market, a continuation to the downside without a trend. Lower low, higher high, momentum still pointing down right through here and under the 18-day average. I think it's more of a trading affair than anything else. And I wish I could tell you that I'm surprised about the platinum-palladium spread, but I'm not. This market came up, fought its battle at the 18-day average, and when it got down to the lower Bollinger Band yesterday and today, I was pretty convinced that what you were going to get are people coming out of these spreads, and it's just about what they were doing. Now, we're just getting it now where this market's coming up and the other market getting its bounce. So here's what I'm viewing on it. Still an overall hard to trade market in platinum and palladium, but the palladium's the strongest of the metals, still in its uptrend until you take out this low. It is in a corrective mode because it is overbought. In the dollar index came in, hit the lower Bollinger Band today and is getting its bounce, got it back to the 18-day average. Now, this isn't open yet, but the euro currency will be. And in the euro, you're looking at a market that's Right now down about 4.5 at 112, 14.5. The pound up a little bit, and these are the current prices on everything, even the stock market, how they're opening again. So as you get these opening prices, you start looking to see what are the next opportunities. And as I said, I'm going to give you an opportunity on my gold report. I don't write these that often anymore because I do videos, but a lot of people like to read. And what I decided to do is something different. I haven't done this, frankly. I decided instead of looking at weekly charts and daily charts, I'm going to go to the monthlies. There are a lot of people that like to place their, if you will, their investment ideas on what longer term charts look like, and they don't get a lot longer than looking at the monthly chart. So I break the charts down for you in a very interesting way. It's a series of charts. You're going to see the different studies, my commentary on each, and where they go. Now, in addition, of course, if you get my research, you know that I put out morning flash updates, and they're roughly 15 minutes long where I review all the markets. I'm going to be late tomorrow. So all of you that are in my market research, you'll hear about it tonight. They'll be out, but they'll probably be out closer to 10 or 10:30 than they are at my normal time at 8:30. I have to be out of the office first thing in the morning, then I'll be back in. How do you get all this? It's really simple. Call my staff, 866-973-2077. You can go to our website at www.iraepstein.com. You can sign up for it there. You can click right up here. If you see me on YouTube, there's an icon. Click on that. The form will appear underneath us on many websites. It says, click here for Ira's free information. Do so. The forms will appear. Choose the Ira's Market Research. If you've gotten it before, we'll try to get you the gold report, but you're not going to get 20-day access if you had it once before. Hey, that's how I pay for all these videos for you and everything. I need the subscribers. So I'm Ira Epstein. You have yourself a great day, and I'll see you all tomorrow.